Tesla stock is down in the pre-market, almost 2.5%. Currently sitting at $468.45. Being up this much in such a short period of time, I'd say TSLA has deserved a little respite. Respite? Whatever, it deserves a little bit of a break. I'm not sure where TSLA is going to go in the short or medium term, but what I do know is that these legacy auto manufacturers are having a bit of a rough go, if you know what I mean.
Many questions remain. It's not clear what and when and what shape the partnership will form. We're not sure if it's a merger, production will be overlapped, or if it's a capital tie-up. We've had an executive tell us that they're also considering the option of a holding company, which would strengthen Honda's stake as well. So the questions definitely outnumber the answers, but as you said, this is kind of an interesting way for the story to unfold in Japan. Essentially, if Honda forms a partnership with Nissan and potentially Mitsubishi Motor, beyond the alliances it's had in the past, this would effectively split the Japanese auto industry into two. The Honda camp with Nissan and Mitsubishi, and then Toyota with Subaru, Mazda, and Suzuki. While Honda and Nissan's production pale in comparison to that of Toyota, this would spell a lot of interesting implications for their global competitiveness as well in regards to hybrids in North America and EVs in China. Well, for Nissan, the benefits are pretty obvious. The company's been in a lot of financial trouble recently. Poor profit during the last quarter and over the last year or so in the US and China forced the company to lay off thousands of workers, pare back production capacity, and lower its annual fiscal outlook for the current period. For Honda, the answers aren't so clear. Whether Nissan will help bolster its production in North America remains to be seen. It all really depends on how the partnership shakes out. The talk of a Honda-Nissan merger isn't necessarily new. This has been happening for some years now as we see the general decline of Japanese car makers in North America and China, least of all with the advent of EVs, as you know. But with the Honda-Nissan merger, there has been speculation that the government would push for this in a time of great weakness for Nissan. There was speculation about Renault stepping in, but Japanese car makers have been struggling on a lot of fronts, and for the country to lose a company like Nissan on such short notice would be a real hit to the economy. Honda recently pared back its partnership with GM. Nissan is just finalizing its loosening of ties with Renault as well. And so while the Honda and Nissan alliance would spell a lot of bolstered output abroad, it remains to be seen sort of what dynamics are the main motivation for this.
Ooh boy. Let's just say Nissan and Honda, they're doing a little bit more than exploring a potential merger. But don't get it twisted. This will be the play for many legacy auto manufacturers. It's either that or die, right? It's only 2025, ladies and gentlemen. Imagine what this is going to look like all over the planet by 2030. European automakers aren't safe. US legacy auto manufacturers, they're not safe. But the damage caused by the potential extinction of these legacy auto manufacturers, it has to be addressed. It would appear that none of these legacy auto manufacturers has a suitable off-ramp to the future of what automobiles are going to be, and that's electric and autonomous.
Clearly, we have seen outperformance when it comes to General Motors. When you stack it up against some of their peers within the industry, making moves in terms of the cost-cutting space, you look at the guidance, they've been able to raise their profit guidance on a steady cadence here over this past year. I think the big question for investors is whether or not this momentum continues into 2025. What do you think?
We actually don't think this momentum is going to continue heading into next year for General Motors. In fact, last week we cut our rating from a hold to a sell on the stock. With a 12-month price target of $45. We have a few concerns regarding General Motors. I think if you look back over the last 12 months, the earnings growth has really been EPS growth has been driven by the buybacks. They announced a big buyback last fall after the UAW strike was settled, and they continued to buy back more stock this year. So it's really been driven by share count reduction that has driven the EPS growth, not necessarily underlying net income growth. The second thing is Mary Barra talked about EV growth. one of our issues with General Motors is that they made a decision in 2020 to shun development of hybrid vehicles. As a result, they currently have no hybrid vehicles available in the marketplace. Hybrid vehicles are the fastest growing segment of the auto market in the US.
Internal combustion engines, hybrids, to me, these are the same thing. Hybrids are no more than a stepping stone. As fast as hybrids are growing, they will die even faster. There is a little bit of money to be made with the hybrid vehicle, no doubt, but it will be short-lived. GM's desire to pivot to hybrids this late into the game, yeah, that's an act of desperation. And in my opinion, another black eye on the management of GM.
First thing that you have in your prediction list is that it's going to fall short of his 2025 vehicle sales growth guidance. And not just fall short, you see volumes growing only 10 to 15%, which is about half as strong as the guidance. Why then are you not more concerned about that?
That's one of our predictions. The report we put out a couple weeks ago is that Tesla will fall short of this 2025 vehicle sales growth guidance of 20 to 30%.
Yeah, I'm not seeing that, Garrett. As a matter of fact, I see a major, robust return to growth with the vehicle deliveries. 20 to 30%, that's the Tesla sandbag figures. As FSD continues to improve, it's going to attract a new type of buyer. One that simply doesn't feel like driving any longer. Like your boy. But there will also be some entrepreneur-like souls thinking of how they can capitalize on a software that allows your vehicle to drive itself. This will put one heck of a strain on the demand of Tesla vehicles. With any luck, we will get some more locations for potential Tesla automotive factories.
However, I think an important caveat in that prediction is that if they continue to make progress towards getting approval for fully autonomous vehicles, that's really what's going to matter more. And we think investors will be forgiving if they do fall short of that guidance. We have seen in the past many times where Elon Musk, makes a prediction or is too aggressive on his timeline as far as when things will come to fruition for the company. But eventually he gets there. It's just not necessarily in the time frame that he originally said.
Caroline, we started this morning talking with that commentary, the latest bull, but I'm losing track because we've got a bunch of them over the past week. It seems like any doubter of Tesla is being forced to cave right now.
Yeah, and having to play a bit of catch up. And this time it was Mizuho who upgraded Tesla from neutral to outperform with a price target of $515. So now tied with Dan Ives over at Wedbush for the street high price target for Tesla. But the previous price target that Mizuho had was $230.
$230 to $515? What, pray tell, would cause you to make that level of jump? I suppose a better question would be, when is Seth Goldstein and our friends over there at Morningstar going to follow suit? Since before the election results, Morningstar has had a fair value estimate for Tesla at $210. I don't expect the crew at Morningstar to jump to the 500s, but you gotta admit, 210 seems a bit low now.
So Mizuho sees idiosyncratic tailwinds over the next 4 years, positioning it favorably, saying, we expect Tesla's leadership across EVs, solar battery storage, and charging infrastructure should allow the company to better weather the storm than less established peers as the Trump administration removes subsidies for key end markets. We also see less stringent regulation on autonomous vehicles as a key tailwind to Tesla's ability to scale FSD robotaxi deployments, with our base case scenario implying significant long-term revenue from AV autonomous vehicles operations. So the $515 price target was the base case. The bull case is actually $681 a share, which is even higher than Dan Ives' $650.
Everybody's doing that
if
now.
Tesla can accelerate.
I like the way they're like,
if they can
the bull case or the base case. The base case is the bull case, and then there's like a double bull case. We're 200 times forward in Tesla. I don't think people really realize that, because people, to the point of the story, I get the story. I'm arguing that you have to adjust, you have to apply a premium when somebody is the right-hand man of the most powerful person in the world, okay? Like, and that's what he is right now. That's worth value, absolutely, in my mind.
Yeah, how much though, Ali?
For sure, impossible to quantify. So that's my next point, which is then when you actually try to quantify it, if you pull up the chart, I'm looking at it right now, of Tesla's forward PE at 200. Think about the way people were doubting the stock when its forward PE was 100. Okay, that's incredible that we've doubled, and that was a speculative trade then because Tesla's supply chain, its build out, its process hadn't been proven yet. Now, obviously, those who believed in Musk paid out and they won, but still, the idea that the market now is pricing double the disruptive value in this company versus before it was even in the S&P 500, before it even was making like cars at a mass scale is pretty incredible to me, Caroline. It means like a lot has got to fall into place fast for this company for it to not crash again.
Needless to say, it's tough to digest TSLA's most recent move over the past month or so. To the numbers people, it can't possibly make sense. But Tesla is obviously trading on something that you can't put in a spreadsheet. Elon Musk's access to the president-elect, yeah, that has value, but where in the hell do you put that in a spreadsheet? Sure, Tesla's recognizing some of this FSD revenue, but what about this robo-taxi potential? What does that look like? And if we compare it to Waymo, it still doesn't make sense. And when you're talking about the optimist column in these fundamental guys spreadsheet, there's just huge question marks there. I don't know when these potential revenue streams are going to show up on the earnings doc. I just don't know. But what I do know is that I want as many of these Tesla shares as humanly possible before that starts to happen. Because ladies and gentlemen, if you wait for it to show up in the earnings statements, you're too late.
How much room is left in the rally? Joining us this morning is William Blair analyst Jed Dorsheimer. Jed, what a story. I know you think this has some room to run going into year end, but a big question is, again, whether or not you believe it's a car company or something related to AI and energy and robotics, right?
I mean, that's the debate. Listen, I've covered Tesla for a long time at different shops. I was the bull in 2019, and the same arguments against Tesla then are kind of the same arguments against it now. And I'm not going to come on and say, you know, hey, this valuation matters when things are going wrong. I don't think it matters as well when you're in a momentum trend. And so I think we're in that trend right now. And if you kind of look at the beginning of this year, Tesla was the laggard. Tesla did not participate with the other Mag 7 names. And so what you're doing is really filling in that gap with a re-rating up, you know, on a lot of the other non-auto related opportunities for Tesla. And I think that's what's justifying the movement in the stock.
The pushback from bears, at least in the last few weeks, has been, okay, maybe you do get a wholesale reinvention of federal mobility policy, but the technology itself is still not there on robotaxi. We're still doing demonstrations on movie studio lots. How do you answer that?
Yeah, I mean, listen, that's literally been the pushback for the past 7 years on Tesla. And for the most part, those bears have been destroyed in that trade.
Get 'em!
I'm not saying that it won't happen. However, let's look at sort of the positives, and then let's weigh what the negatives are. If we look at the positives here, you've got you've kind of bottomed from a delivery perspective. You've got a Model 2 that's going to be announced on the auto side. You've got an energy piece of the business that has a higher ROIC, return on invested capital, than the other components of the business that's sold out for the next 3 years. You have sort of autonomy, you know, that's going to come in, and probably a pro-regulatory environment for that, given Elon's position in the, you know, around the government. And then you also have a play on XAI, which, you know, for most people you can't buy into that directly. And so this is a proxy on that. On the negative side, you're going to get likely cuts on subsidies, which advantages Tesla in the long run. Near term, it's probably a hit on the gross margins. I see more positives than negatives, and I think that's why you're seeing the stock continue to move up.
Ding, 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 ding! Tell him what he's won, Johnny! Your mother f***ing right. Not a lot of obstacles in front of Tesla heading into 2025. There isn't even a question in my mind that Tesla will solve for generalized autonomy. The only real question is, when? I'm not really concerned if it happens in 2025, 2026, or whatever, because I know there's no other company on the planet that's going to do it better than Tesla can, whether it's the quality of the product or their ability to scale. Tesla is going to decimate the competition like they always do.
Vibes are good, and it's hard to fight against them. I just got a message from a Bloomberg subscriber. I won't mention their name. I believe you know the individual, and we can talk about that in the commercial break. And this is what they say.
Gordon Johnson, maybe?
Tesla has increased since the election by something like 700 billion in market cap, now 1.5 trillion. The business is not growing and hasn't in 2 years. Despite the hopes of full self-driving, it still doesn't work. So less regulation doesn't help it work. It's up another GM in market cap this morning, or better, the market cap of Waymo, which actually has working robo-taxis. My prediction for 25 is Tesla will lose over $1 trillion in market cap. What would you say back to that individual?
I'd say if that person was an NFL scout, they're probably negative on Tom Brady, come out of the 2000 draft, come out of Michigan. I mean, the point is look, despite all the Super Bowls, look, if you look, the Bears, they can't see AI in the spreadsheets. So when they're sitting there in hibernation mode, they don't understand this move. Autonomous is worth $1 trillion valuation to the Tesla story, and I believe now, as this all plays out, it's really just the start. I continue to view this as probably the best pure AI play out there.
In conclusion, the Honda-Nissan merger, yeah, that's not a surprise to me. You're either going to do this or go extinct. This will not be just exclusive to Nissan and Honda. This will happen to all of the legacy auto manufacturers around the world. For those that think that hybrids will save them, they are sorely mistaken. The future of automobiles is electric and autonomous. There is no one on the planet that makes better battery electric vehicles than Tesla. Furthermore, there's nobody with as many autonomous miles driven than Tesla. There is absolutely no one better positioned than Tesla. The best that any of these other auto manufacturers can do is figure out how to drive down their cost to produce battery electric vehicles and immediately enter an agreement with Tesla to license this FSD software. The first company that does these two things, you'll know they're serious about surviving the decade. Let's not get it twisted. Tesla has a lot of work to do. This isn't just going to happen magically. Over the past decade, they've recruited the best talent on the planet. Doubt Elon Musk all you want, at your own risk. But I'm gonna tell you right now, folks, the man gets shit done. And I don't see that changing anytime soon. That's all I've got for you today. Be easy. Peace.